Yeah, thank you, Brent, and thank you for the opportunity to speak here today. So it's Arizona Sonoran Copper Company. We're listed on the Toronto Stock Exchange main board. We trade on the OTCQX, and the title of the presentation is Copper Invest in Sustainability. We do make some forward-looking statements, so I'll draw your attention to our cautionary language. This presentation is on our website, so please review it at your own discretion. A little bit about the share capital structure, first of all. 104 million shares issued, fully diluted 114. Options and warrants are in the money. Company is currently debt-free, and we just completed a $30 million Canadian bought deal at $2 share price, which was the same as a private placement about a year ago that was also did at $2. So currently the market cap of the company and a $2 share price is approximately 200 million Canadian dollars. Since joining the company, I've invested $2.7 million of my own money at a weighted average price of $2.45 and feel extremely comfortable with that investment. And I think we're going to be very well rewarded on this project over the course of the next several years. I'm happy to say as part of that bought deal, outside of it, Rio Tinto has exercised their pro rata rights and will be giving us an additional $2.4 million before the end of March, which will take them back up to the 7.2%. Remember, they have the ability to go up to 9.9%. There's no board seat, but they do have a guest appearance on our technical committee. So the project is located 45 miles south of Phoenix. It's a former producing mine that was owned by ASCU back in the 1980s. It closed in 84 when copper was 60 cents a pound and it was uneconomical. Eventually, ASCU filed for Chapter 11 bankruptcy in 2004. A lot of their assets were picked up by Grupo Mexico. This one wasn't. It fell into a state trust. The trust was managed by the Arizona Department of Environment and Quality. ASCU funded the trust with $20 million. And over a period of 15 years, they remediated the site until 2019 when we were able to pick it up of the state trust for $6 million US. The area is very well supported by infrastructure. Interstate 10 is only 10 miles to the east. We've got the highway on our southern border, and there's even a rail line where they were shipping out copper concentrates. It's a brownfield site. It's a Tier 1 jurisdiction. Obviously, we're on private land. We have information from the U.S. Army Corps of Engineers that there's no federal nexus here. There's no WOTUS, so that completely simplifies the permitting. We already have water rights through until the year 2070, and there's a very strong aquifer sitting 2,000 feet below the ground that will give us all of the water we require for the mine's life, which will be in excess of 30 years. The water is also only permitted for an industrial use. It carries certain elements like selenium and chromium and zinc, meaning that it's not accessible by farmers and ranchers because it's not potable and they don't want to put it into the food chain or the livestock. This is a simple heap leach operation now with an SXEW plant. We're adding a lot of scale, and you'll see on the future slides, this is the third largest independent copper project in the US. And of course, the management of any company is extremely important. If you do a little bit of background on the management team of this company, you'll see that we've got a very strong track record delivering exceptional results for the shareholders of the company. We did complete a life cycle analysis last year, again by Minviro out of the UK, and eventually we do see a pathway to net zero carbon emissions here. If we exercise on our plans at the end of this year, we'll have a pre-feasibility study. Second half of 2024, it's bankable feasibility study. And with project financing in place, it's an 18-month construction and development period. And we'll see first cathode production towards the second half of 2026. So today we have 6.5 billion pounds of copper in the ground. When you look at that in metric tons, we're looking at about 3 million metric tons. And you'll notice there Santa Cruz, which is the Ivanhoe Electric Group, is immediately on our southern border, and they have approximately 5 million tons of contained copper in the ground. And of course, they're planning on mining the down plunge extension of the system that ASCU mined and we intend to mine. For those of you who are interested, Ivanhoe Electric has a market cap today of $1.5 billion US, of which 70% is ascribed to Santa Cruz, giving that a valuation of approximately $1 billion, whereas our project has a valuation, a company has a valuation of only $150 million US. So we think the valuation gap is too large there, and over the course of the next quarters and 12 to 18 months, we believe that valuation gap is going to narrow with our valuation coming up. A real game changer for us, which wasn't in the PEA that went out 2 years ago, is really the addition of Park Salyer that we put out as a maiden resource last September. It's 2.4 billion pounds of leachable copper in the ground at a grade of over 1%, which gives us 123 million tons of contained copper in the ground. You'll notice that that in totality is more than the cumulative tons from Cactus East, both in the indicated and inferred resources. That's the reason why we deferred the PFS last year for Cactus, to give ourselves the opportunity to drill out Park Salyer into an indicated resource and bring it into a rescope PFS at the end of this year. So just to recap, the PEA that went out 2 years ago was 28,000 tons of copper cathode production over an 18-year mine life. The management is now pursuing a 50,000 ton cathode producer, and the mine life will be in excess of 30 years. So we also have 1.7 billion pounds of copper in primary sulfide, in this case chalcopyrite, which is part of the 6.5 billion pounds. Typically, the only way to process that and recover that copper is through a flotation mill. That's what ASCU had back on site some 4 decades ago, which is obviously is now gone. We're obviously working with Rio Tinto in their Newton technology, which is looking at the leaching of a primary sulfide. And the column tests are already 4 months underway down in Bindura in Australia, just outside of Melbourne. The initial results look very encouraging, although I would say that obviously it's very, very early. And of course, if the results were positive, there's still obviously a commercial agreement that would have to be negotiated with Rio Tinto, which obviously is going to take quite a bit of time. I do believe, however, that in a worst-case scenario, if the Newton technology were not successful, once this company is up and running and we're generating free cash flow from our copper cathode from the leachable material, there's definitely an option for the company to look at flotation and at some future juncture in time. So a little bit more on the valuation. With 6.5 billion pounds of copper in the ground, we're currently being valued on an enterprise value per pound of copper in the ground at 1.5 cents. And you'll see there on the left-hand side that Ivanhoe Electric with Robert Friedland is currently being valued at 12 cents a pound of copper in the ground. So we have a high-quality project that's in a Tier 1 jurisdiction. It is a known entity, given the mine was in production for 10 years plus in the 1970s and 1980s. We've got a fantastic land package that is very underexplored. Indeed, we're dedicating some $4 million this year to exploration on the site. And we believe that over the course of the next 2 to 3 years, we can find at least another 2 to 3 billion pounds of copper to take this up well north of 9 billion pounds of contained copper in the ground in Arizona on a Tier 1 jurisdiction with permits in place and access to water. And of course, as I said earlier, there's a management team here that has a proven track record of delivering exceptional results for the shareholders of the company. So that concludes the presentation, and I see that I have a minute remaining, so I'm very happy to take any questions that anybody may have at this juncture in time. Yes? No, there's a handful of companies, McEwen Mining Copper, Excelsior, Regulus, and ourselves, who've all announced deals with Newton. It's obviously at a very preliminary testing phase. Rio Tinto have been experimenting with this technology for 4 decades in-house. Several years ago, they did a 70,000 ton bulk sample through a pilot plant at their Kennecott mine in Utah. It's not too far away from where we are. And they had very good results, apparently. But this technology has never been taken to production on a full commercial scale. But that's obviously what Rio Tinto's plan here is over the next 5 years, is to try and identify those projects that could make it to production and then show the wider copper community that this technology actually has a place within the industry. Yes? Yeah, why has Ivanhoe not taken us over with their inflated paper? Well, first of all, as we all know, Robert Friedland has a remarkable career over 4 decades. I don't believe he's ever bought anything, and we don't expect that that's going to change at this juncture in time. So we're really focusing on de-risking this project and putting it into production ourselves and building a really solid mid-tier copper company in the heartland of the US. The other nice thing is that with Tembo Capital, our largest shareholder, being a 32% shareholder, Rio and management also bringing in an additional 12%. We're basically sitting at over 45% of the company being controlled by 3 entities. So nobody's going to come in tomorrow and give us a friendly bear hug. Tembo's cost of capital today is $1.50, and they would only consider exiting the story if they saw a 3 times return on that. So we're going to be looking at share prices well north of $4.50. So at this juncture in time, we're in a very good situation that we're going to get the opportunity to further de-risk this project and add significant value.